It's tax season. As law abiding people of the United States, most of us are obligated to file taxes. But what happens if, for whatever reason, you cannot make the tax filing deadline? At Denary, we're Ivy League trained and passionate about financial literacy. We have your back on all things finance and ultimately want you to have the tools to reach your financial goals. Quick disclaimer, this is not legal, tax, accounting, investment, nor other professional advice. Please consult a CPA and do your own research for your individual situation. So, let's start with when taxes are due. Usually, taxes every year are due on April 15th. However, if the 15th falls on a holiday or a weekend, which is the case this year, then the deadline can be bumped to the next business day. But this year, because Washington, D.C.'s Emancipation Day falls on April 17th, the deadline to file your 2022 tax returns is Tuesday, April 18th. If you live in an area that was affected by natural disasters like floods, tornadoes, or wildfires, you may have more time to file because your individual and business returns are not due until October 16th, 2023. Check the IRS website to see if your county is exempt. I'm not saying that you should wait until the last minute, but sometimes people make the mistake of filing too early. Conventional wisdom tells us to get your taxes done as soon as possible, but you should wait until you have all of your documents ready. Some of these documents are not published until March. Also, corrected 1099s and delayed K1s are becoming increasingly common, and filing too early could mean that information is left out, which causes filers like you to have to amend returns later in the year, which takes additional time. That out of the way, what happens if you cannot make the April 18th deadline? You might need more time because life, maybe you had unexpected life events like illness or death in the family, or maybe you're missing some tax documents. Maybe you lost your W-2s and are waiting for a duplicate one to arrive. If you are missing documents, it's better to wait until you have everything than to guess or to prepare your tax returns in a rush. Honestly, the reason doesn't matter. The IRS doesn't need an explanation for why you are applying for an extension. How do you get an extension? There are 3 ways to request an automatic extension from the IRS. Number 1, you can pay all or part of your estimated income tax due and indicate that the payment is for an extension. Number 2, you can file Form 4868 electronically via IRS e-file. Or number 3, you can paper file Form 4868. If you make an electronic payment, you do not need to file Form 4868. The IRS grants an automatic extension to file as long as you apply for it. After the IRS has accepted your extension, most people have until October 16th, 2023 to file their returns. If you are filing for an extension because you're out of the country, the extension is only for 4 months. So, what happens if you don't file for an extension by the tax filing deadline in April? You could get a failure to file or failure to pay penalty. The late filing penalty is usually charged if your return is filed after the due date. It's usually 5% of the amount due for each month your return is late, and the maximum penalty is 25%. But know there is a chance that you might not owe the penalty if you have a reasonable explanation for filing late, but usually it's best to not risk it. Now, here's the most important thing you need to know. Even if you obtain an extension to file, you must still pay your tax liability by the deadline on April 18th if you owe money. You need to pay at least 90% of the total tax owed. Regardless of when you file your tax return, if you do not pay the tax owed by the tax filing deadline in April, there are penalties. There is the late payment penalty, which is usually 1/2 of 1% of any tax not paid by the due date of your return in April. This is charged each month or part of the month that the tax is not paid. And over time, the penalty will increase until it reaches the maximum penalty of 25%. As long as you pay that 90% tax liability by the deadline, you won't get a late payment penalty. You will also owe interest on any tax not paid by the regular due date, even if you do qualify for an extension. Lastly, there is no penalty if you miss the deadline and you do not owe money. but you will have to wait longer to receive your refund. So don't forget, if you need more time this year to file your taxes, file for an extension, but don't forget that the extension is just for filing the tax return. It is not for actually paying. I hope this helps. Let us know in the comments if you have questions or there's anything we can clarify.